Welcome back to lecture 19 of securities regulation. We are doing a review of a draft red herring prospectus that was filed last year by Burger King India Limited. We covered up till risk factors, and therefore we should start at risk factors in this lecture. Now, risk factors is one of the most important chapters in the DRHP, right? We know that an investment in equity shares involves a high degree of risk, right? And therefore, anybody who's investing in this company or any company for that matter should carefully consider all the information disclosed in this draft red herring prospectus, including the risks and uncertainties described below, right? So, what are the risk factors that are applicable to Burger King or an investment or applicable to an investment in Burger King? Now, all risk factors can be classified as internal, that is relating to the company, something that the company may have some kind of control over. On the other hand, there will be external risk factors which the company may not have any control over. We'll come to what are external risk factors later on. Now, you'll notice that all risk factors follow a particular pattern. Now, there is a brief sentence, in this case it's not that brief, it goes into 3 lines, which effectively captures what the risk is. Now let's figure out what the risk is. Real and perceived health concerns arising from foodborne illnesses, health epidemics, food quality, allergic reactions, or other negative food-related incidents could have a material adverse effect on our business, results of operation, financial condition, and prospects. Now, over the last few years, of course, we've seen how and why there are a number of foodborne illnesses or specifically related to poultry and dairy, which do spread through animals and into humans as well. We do also have a number of incidents um, where people have fallen sick after eating out or having too much fast food. And in general, of course, any processed food or fast food is generally considered to be unhealthy, right? So as an operator of quick service restaurants, our business is susceptible to health concerns arising out of foodborne illnesses, health epidemics, food quality, etc. And if there is an occurrence of an outbreak of a foodborne illness, mind you, we are in the middle of a pandemic, so this is very, very relevant. Um, if there's a health epidemic or other adverse public health event in India or in our vicinity, this could cause a temporary or permanent closure of our restaurants and materially disrupt our business and operations, right? As a result, foodborne as a result, this will affect our revenue, our turnover, and our profitability. Any incidences of foodborne illnesses or food tampering could also be caused by our third-party distributors, suppliers, customers, employees, etc., and may be outside our control. As it is, so our third-party distributor and our suppliers transport and handle ingredients. And although we have certain controls in place, we cannot ourselves monitor the ingredients and packaging material. So, for example, let's say if on a particular day, one particular food server or somebody who's working at a Burger King restaurant contracts a highly contagious airborne respiratory illness and continues to work because he's not showing any symptoms. And that could affect the customers in the restaurant. It could affect other employees in the restaurant over there. So as a result, Burger King, the company, doesn't really have control over the day-to-day operations or the day-to-day management of individual employees or food items, and therefore, if there is a negative food-related incident, we could have we could sort of look at litigation, including our customers or sanctions and fines by food safety regulators, right? Now, we cannot make any assurances that our internal controls will be fully effective in preventing these or any other negative food-related incidents, right? All right. They go on to describe specific instances or specific problems that may occur for these kind of restaurants, and what kind of foodborne illnesses um, could come up in the future, right? And which have impacted this industry in the past, right? They also make a mention to outbreaks of foodborne illnesses such as the swine flu or avian flu, um, which will affect these restaurants considerably in the event that there is an avian flu. Then a lot of birds will be culled, a lot of poultry will be killed, um, and they might find it difficult, or they might find it more expensive to get the raw materials that they need. All right. Um, A second risk factor, I'm just going to take a couple of examples here. Our exclusive right to develop, operate, and franchise Burger King restaurants in India depends upon a master franchise and development agreement. Now, I'm assuming that they have entered into this franchise agreement with let's see who they have entered into. That we have entered into a national master franchise with BK Asia Pac or Asia Pacific Private Limited and our promoter, right? So basically, what I'm given to understand is that the master franchise and development agreement provides us with the exclusive right and license to develop, establish, operate, and franchise Burger King restaurants in India, as well as to use and permit the sub franchisees to use our intellectual property and our technology, right? So I'm given to understand that that Burger King Asia Pacific and our promoter, they will have the rights to use the original intellectual property rights, to use these marks and to use this technology, right? And there are certain restrictions and other obligations on our operations, which the termination of which could adversely affect our business. So, if at any point of time, Burger King Asia Pacific or our promoter, if they decide to cancel this master franchise and development agreement, Burger King will no longer have the right, or Burger King India Limited will no longer have the right to run these restaurants in India, right? However, it's fairly, we may admit that it is fairly unlikely that something like this would happen, but it's just that it is a possibility, and therefore we must mention it as a risk, right? So let's just take a couple of examples of how this might be terminated. Our company is obligated to develop and open at least 700 restaurants by December 31st, 2025, provided that at all times the company owned restaurants will represent at least 60% of the total number of Burger King restaurants in India, right? If our company fails to achieve the cumulative opening target, then Burger King Asia Pacific may terminate our development rights. So, which means that if I don't have 700 restaurants by December 31st, 2025, Burger King Asia Pacific may say that, look, I don't think India is a market that we need to be in. You failed to meet your target, and therefore I am yanking the intellectual property rights that you have, and I'm canceling the master franchise and development agreement. If that were to happen, obviously Burger King India stands to lose a great deal. They'll stand to lose um, their entire business, basically, right? We are also required to get prior approval of Burger King Asia Pacific for what? For opening and operating each of our company-owned Burger King restaurants, sub-franchising restaurants, appointing suppliers, offering local menu items that are specific to the Indian market. Effectively, a large chunk of discretion is with Burger King Asia Pacific. So, through this agreement, Burger King Asia Pacific is calling a number of shots, right? So any changes in our subsidiaries, amalgamation, merging, selling, conveying, transferring of our property or assets to any other person will require prior written approval of Burger King Asia Pacific, right? So effectively, we are sort of indebted in a way, or we are acting in a way on the directions of Burger King Asia Pacific as well, right? We cannot, of course, control or influence the actions of Burger King Asia Pacific, and they may at any time have economic, business, or legal interests or goals that are inconsistent with ours. So, for example, um, Burger King Asia Pacific might decide that instead of India, we would like to invest more in, let's say, Bangladesh or Nepal or Pakistan or any of our other neighboring countries, in which case Burger King Asia Pacific has the right to do so, right? Um, all right. So we've taken a look at a couple of these risk factors. A risk factor is basically any reason why an investor should not invest in a company, right? And they can get fairly detailed, as you can see. Now, they also mention, here's a third one, we could point out, that there is a growing awareness that fast food restaurants or fast food or processed foods tend to be slightly bad for health, in the sense that they can lead to high levels of cholesterol, they can lead to heart disease, and so on and so forth. Now, there can be therefore a change due to a shift in consumer demographics. And if we are not able to adapt our menu, then that could again, of course, um, affect our financial results, right? So, for example, our customers may begin to seek alternative restaurant options or eat at home, right? Which basically means that our customers may want to have on a particular day McDonald's or KFC as opposed to Burger King. They may want to have a healthier option, such as a salad, which I don't know whether Burger King offers, but I know that Subway definitely offers that. So, um, in other words, we could have competition from people offering healthier convenience food options, right? All right. So, and if our consumers taking, start moving to healthier options, then they then Burger King might have a problem, right? All right. I'm going to skip the other risk factors. Feel free to take a look at them in your own time. But what I'm going to do is I'm going to focus on one risk factor. This is a risk factor that is usually there in all offering documents or all offer documents. There will be a risk factor in the top 10 which talks about legal proceedings. Our company and one of our directors are involved in certain legal proceedings at different levels in courts. In the event there are any adverse rulings in these proceedings, our company and our directors may need to make payments or make provisions for future payments, which may increase expenses and current or contingent liabilities and also adversely affect our reputation. So there are a total of that's 9, 13, 13, 15 proceedings against the company and one against the director, right? And the aggregate amount involved is not very large compared to the size of the company, but it's still enough to be noticeable, right? And of course, there will be further details in the outstanding litigation chapter. All right. I'm going to scroll down a little bit more to the end of the internal risk factors. So, again, just to remind you guys, the internal risk factors are those risk factors that are specific to the company or the industry. External risk factors are those that are not specific to the company or industry, right? I'm going to keep scrolling down, and here we come to external risk factors. So, external risk factors, like I mentioned, these are those risk factors that exist but are not specific to the company or the industry. These will affect a large swath of industries or a large number of companies. So, unforeseeable business interruptions, including war, terrorist activities, political and social unrest, epidemics, and natural disasters such as earthquakes, could have a negative effect on the Indian economy and adversely affect our business. Now, again, these are risk factors that you will find in every draft red herring prospectus, right? So any act of war, an act of God, a pandemic, will have an effect on the Indian economy. We've seen how the stock market dropped in March 2020 because of the onset of the pandemic. Of course, the stock market has recovered since then. Any changes in laws might affect us later on. For example, let's say the government of India comes out with a new law saying that you'll have to limit the amount of salt, fat, and sugar in fast food restaurants, acknowledging the fact that salt, fat, and sugars are some of the most addictive substances in fast food. In which case, we might have to rethink our business strategy. We may have this may adversely affect our business, our financial condition, and results of operations. Right. All right. So that's it on internal and external risk factors. I'm just going to quickly go through. Of course, there will be market risks related to our equity shares. So, for example, no matter what you buy, we may have a fresh issue of shares later on. And therefore our shareholding percentage might get diluted down. We will have more costs as a result of becoming a listed public company. We cannot guarantee that there will be an active trading market for these equity shares, and so on and so forth. These are again standard risks that relate to securities that are listed or equity shares that are listed for any company. This is not specific to Burger King at all. All right. So in the next lecture, we'll move on to the introduction chapter. That's it for risk factors as of now.